Yo, this $57 trillion market that is known for being very conservative was just exposed in an article in the Financial Times for quietly buying Bitcoin. While everybody is focused on this nation state strategic Bitcoin reserves, nobody is paying attention to what this $57 trillion market is doing. So who are we talking about? We are talking about the enormous pension fund market that is adopting Bitcoin all around the world because we know Bitcoin is growing way too big to be ignored. On the show today, we have Rob Hamilton of AnchorWatch. Guys, if you don't know what AnchorWatch is, you should, because they are one of the most exciting projects and companies in the space, really solving some of the custody problems that need to be solved in order for mass scale Bitcoin adoption. So Rob, welcome to the show. And of course, my legendary co-host who's always optimistic, Optimus Fields. Let's jump straight into the news. Anyways, here's the Financial Times article, absolutely massive, this coming out. The headline for the audio listeners is pension funds dabble in crypto after massive Bitcoin rally. It goes on to say, pension funds are dipping their toes into buying Bitcoin, and a sign that even typically staid corners of finance are finding it hard to ignore the potential outsized returns from cryptocurrencies. Pension schemes for the states of Wisconsin and Michigan are among the top hodlers of U.S. stock market funds devoted to crypto, while some pension fund managers in the UK and Australia have also made small allocations in recent months to Bitcoin using funds or derivatives. Advisors say the surge in Bitcoin last year, which more than doubled to touch 100,000, has spurred the interest of conservative trustees. Crypto analysts predicted it could double again this year with the arrival of a pro-crypto Trump administration. The president-elect has vowed to make the U.S., quote, the Bitcoin superpower of the world and end a regulatory crackdown on the sector. Matt Scott, a consultant at Mercer, which advises UK pension funds, said, quote, since election day, we have been getting a flood of queries, and trustees don't like to think that there's a hot asset class out there that they don't know anything about. More pension funds have turned to the regulated U.S. exchange traded funds approved last year, which invest directly in crypto on investors' behalf and track the price of tokens such as Bitcoin and Ethereum. The state of Wisconsin Investment Board was the 12th biggest shareholder in BlackRock's Bitcoin ETF at the end of September. According to its latest filings, a holding that would now be worth $155 million after the fund leapt 50% since the start of the quarter. Michigan is the sixth largest shareholder in Grayscale's Ethereum ETF, and its stake is worth $12.9 million based on a November regulatory filing. Anyways, you guys get the general gist of it. It continues to talk about other pension funds, including in the country of Canada. This seems like a worldwide phenomenon. The United States, the United Kingdom, Canada. I mean, this is exciting. And also, you know, I'm a big fan in aligned incentives in Bitcoin, right? And if pension funds start getting exposure to Bitcoin, that means a lot of these federal workers are going to get exposure to Bitcoin. And in the future, if there's any politicians that are, you know, playing around with potential hostile Bitcoin regulations, you know, all those people that are benefiting from those pensions are going to say, hey, what are you doing? Stop effing with my bags, you know? So I love the fact that Bitcoin is really penetrating traditional finance. You know, the Bitcoin, no one can resist Bitcoin's number go up technology, and it's really spreading like wildfire. I think 2024 was the introduction of Bitcoin in traditional finance with the approval of the ETF in January of 2024. And I think this year that trend is going to continue to accelerate, especially with the inauguration of Donald Trump coming up in 4 days, the first pro Bitcoin president. Like, absolutely amazing. So I think the regulatory environment is going to dramatically improve compared to the last 2 or 3 years, 4 years, where we saw, the acceleration of the so-called Operation Choke Point 2.0. Anyways, Rob, welcome to the show. This isn't surprising. This isn't surprising at all. The pension funds are looking at Bitcoin. No one can resist Bitcoin's number go up technology, can they?
No, they can. Thanks, Nico and Opti, for having me today. So it's funny, like the structure of a pension fund, what it is they take in like member dues. They contribute to this like fund, similar to like a 401k or IRA for the members of whatever organization's running it. And they have long dated future obligations, right? You're paying into it today so that in 40 years, you're able to get access to some money that you can live on in the future. This is traditionally in finance what is consumed by what's called the fixed income market, right? You have a bond where you put up $1,000 today, maybe you earn 5% interest over the next 10 years, right? And this is how you kind of like maintain the treasury if you have long dated liabilities like this in a pension. And I think a lot of people have started doing the math and realizing, wait a second, if I take a really small bite of my $55 trillion pool of capital and I throw a little bit into Bitcoin and it keeps having these massive returns, you're going to be able to de-risk the health of your pension in the long run as those liabilities keep going and pushed further and further out into the future. There's been a lot of work around this, I know, but it was really hard before the ETFs. You would have to convince like a firefighter pension to like hold Bitcoin directly or hold it in trust with someone else. But now you're being plugged into all these traditional like financial rails where you can just, the same people who are managing the pension have like a Schwab account or a Fidelity account or whatever have you, and they're able to just click a button and just buy exposure to Bitcoin through those ETFs. So I think it's a massive trickling of capital that's starting to get unlocked and get hyper Bitcoinized. This is just part of hyper Bitcoinization, though, in the future, is just other financial instruments and being able to find their exposure and getting that number go up technology.
Absolutely. And then, Rob, you're helping build this stuff out, right? Especially with AnchorWatch. Like it's going to play such a pivotal role, because what people have to understand is, listen, if we don't solve the Bitcoin custody problem, nothing changes. I can't emphasize that enough, right? The beauty about Bitcoin is that it enables you to take self-custody. That includes individuals, that includes institutions, and that includes nation states. However, self-custody is not easy. It's not pretty straightforward. And you have a lot of questions, right? Like, okay, so if you're a company and you have part of your Bitcoin treasury in self-custody, are you going to use a single sig? Are you going to use a multi-sig? Who are going to have those keys? How are you going to trust them, right? And that's exactly what AnchorWatch is focusing on. And you guys are the vanguard of this. And it's absolutely incredible seeing this project play out over the last couple of years. And you guys just announced your official launch, which is extremely exciting. So could you talk a little bit about that, Rob? Like, what is the custody issue that companies are facing when they look at Bitcoin, and what is the problem that AnchorWatch fixes?
Absolutely, yeah. So for larger traditional financial players, they typically don't have the infrastructure in-house to custody those assets directly, right? And this causes an unfortunate like game theory outcome where you're going to have a lot of coins sitting at a few places with custodians. Now, structurally, this is a problem for many reasons: for the health of the network, for being able to actually have access to your money itself, right? Using intermediaries starts to break down kind of the network assumptions and how Bitcoin should be governed. Now, our crack at trying to change this is we leverage Bitcoin native smart contracts to actually allow you to be able to hold keys in what we call joint custody. We can get into the details later, but we actually are having it set up so that you as a customer have a multi-sig, a 2 of 3, and AnchorWatch has a multi-sig of a 2 of 3. And both of them must co-sign for the length of an insurance policy to be able to move the funds. What ultimately, though, I view too is that when you have pension funds, ETFs, all these long dated liabilities, they're either uninsured or heavily underinsured. And fundamentally, the way we view it is that the relationship, if you're going to work with a custodian, the whole game is that you pay them fees for managing the asset for you. But if something goes wrong, you should be able to get indemnified. You should be able to get paid out so you're not losing access to your exposure to Bitcoin. And that's kind of it was a long time coming, but that's kind of what we've been building out both on the technology side and offering regulated insurance through Lloyd's of London bound policies. We are Lloyd's of London cover holders, so we are direct agents that are distributing Lloyd's of London policies, underwriting your name to your Bitcoin, directly tying that all together.
That's awesome, man. And it's so instrumental in Bitcoin adoption, right? It's so we need to figure this out. Entrepreneurs like yourself need to figure this problem out, or there's only so much Bitcoin's going to be adopted, because again, it's so easy to talk about self-custody as an individual. And it's even not that easy too, because then you go down the multi-sig rabbit hole, you go down the 25th the 25th word rabbit hole. But again, like for institutions, things become even more complicated. Like, what type of access should my COO have? What type of access should my CFO have? Right. The insurance thing is extremely exciting, because it's like, even if, you do a 2 of 3 multi-sig, what if someone shows up at your house, $5 rent attack, like that, all of those things need to be talked about. So I'm so happy that there's actually someone out there who's very intelligent, who is actively trying to solve this problem. Anyways, Opti, what is your take on this, brother? The pension fund news is absolutely massive. I mean, dude, like, we can't stop winning. We have nation state adoption. We have state level adoption. Now pension funds. We have the largest bank in Italy saying that they bought Bitcoin. We covered that on like an episode 2 or 3 days ago. I mean, was Trump right when in the Nashville conference he said that you guys were going to get tired of winning? Is this what he meant, Opti?
I don't know. We'll see. We got 3 business days to see how much winning we can actually achieve in day one. So, cautiously optimistic on that. But really, I want to go back to this article a little bit, because there is a couple quotes here that Nico didn't cover. They were a little longer in this article, and I think this is a message that needs to be stressed more. So obviously, Nico covered this one, but interest from typically conservative schemes has grown following the launch of the U.S. crypto ETFs. Like, I think this is one of those things, like that Rob was just saying. Traditionally, pension fund managers are the most conservative investors, period. And so the fact that they're looking at Bitcoin, I think that's signal for a lot of people that maybe Bitcoin isn't as risky as you may think. And then, of course, the next one is kind of piggybacking off what Nico just mentioned, which is this Trump effect that we're seeing. And here's another quote. Since election day, we have been getting a flood of queries in. Trustees don't like to think that there's a hot asset class out there that they don't know anything about. Again, we've been covering this so much on the show that really everyone here that hangs out with us on Simply Bitcoin, all the Bitcoiners, we still have asymmetric knowledge out there. And there's people that have been bamboozled by all the FUD around Bitcoin. They think it's just for criminals and it's just internet nerd money and it's too risky and volatile and I need to stay away. And then when you look at the numbers, it's like Bitcoin is the best performing asset the last 15 years. It basically was the best performing asset last year, and they're missing out on all the gains. Obviously, everyone comes for the money, and then they'll eventually stay because it's better money. Now, the last quote that Nico didn't mention, which I think is essentially the key theme here, again, quote, we generally thought that even though crypto is risky, new and not yet fully proven, that it had become too big and its potential was too great to continue to ignore. Now, this is the stage that we are right now. People are starting to realize that, hey, Bitcoin isn't going away. Obviously, I like to get the price appreciation of Bitcoin. I'd like to get the exposure. This thing isn't just going to disappear here. It's not going to zero here. It's becoming too big to ignore. And I think this is the signal we're going to see play out in 2025, that, hey, you can ignore Bitcoin at your own peril. Like, you can continue to say that Bitcoin is trash. Oh, it's too risky. I don't want to, hold it. Or, in Rob's arena, it's too risky for me to custody this stuff. And now all of these solutions are coming out and people are starting to realize, wait, this Bitcoin thing is actually here. It's not going away. And now that the latest memes of, hey, maybe it's going to $1 million this year, maybe I want to get some. So, hey, if the most conservative investors in the world are starting to take Bitcoin very seriously, I think that's a lot of signal for people out there like, your mothers and your friends and all the skeptics out there that, wait, maybe this Bitcoin thing is something I need to get. All of the Satoshi quote, maybe you want to get some just in case it catches on, because it seems to be catching on. And the entrepreneurs in Bitcoin are building the tools that are needed to really take over the world. And we're going to talk about that more in the culture with Rob, because I think he's built one of those products. So that's my takes on this stuff, Nico. We can keep it moving.
Absolutely, guys. We got a packed show for you guys today. So much to talk about in regards to an executive order. I spoke to the man who orange pilled Michael Saylor. We had an hour-long conversation yesterday. We're going to be dropping that podcast, I think, in about a week or two. His name is Eric Weiss, and he was talking about the significance of the SAB 121 order being repealed. So we're going to talk about that, what the significance of that is going to mean. And then during the news segment, we have some news that are coming out that apparently we have an update for you guys regarding apparently Tether filed a lawsuit against Swan Bitcoin. So we're going to look at the details on that, update you guys on that. So it's going to be a packed show, lots of stuff to talk about. So stay tuned. And of course, during the culture segment, we are going to talk to Rob about AnchorWatch. I'm telling you guys, this is one of the coolest projects in Bitcoin that you guys are going to hear a lot about in the coming years. So stay tuned. But before we jump into the show, guys, I do want to give a shout out to, of course, Simply Bitcoin's lead sponsor, BitcoinWell.com. Buy real Bitcoin and enable your independence with the fastest and safest way to buy Bitcoin on chain or via the Lightning Network in Canada and the USA. To get started, you put in your email address. It takes 2 to 5 minutes to get verified. Bada bing, bada boom, you're ready to go. Now, what makes Bitcoin Well different is that, of course, not only is it Bitcoin only, it's completely non-custodial. What does that mean? It means that when you buy Bitcoin on Bitcoin Well, as soon as the funds clear, it goes straight to your self-custody Bitcoin wallet address. It doesn't even allow you the ability to leave the funds on the exchange. If you're a higher net worth individual and you're looking to buy $50,000 worth or more, check out their Bitcoin Well Infinite product. It's a white glove service tailored for people that are sick and tired of dealing with UI. They don't want to deal with support emails that take a couple weeks to get back to them. They want a real human being that they can call every time they want to buy or sell Bitcoin. To get started, go to bitcoinwell.com/OTC. Also, every time you buy Bitcoin on Bitcoin Well, you earn Bitcoin Wishing Well points, and you could use those towards the Bitcoin Well contest, which we just did live for you guys. First person to scan the QR code on the screen has won 210 sats. You win every time you toss a coin into the Wishing Well. And if you use promo code SIMPLYBTC, again, SIMPLYBTC, to sign up to bitcoinwell.com today, you get 3 tosses into the Wishing Well for an opportunity to win up to 1 million Satoshis. All right, everybody, we're going to hit the numbers. We'll be right back. I want to tell you guys about our sponsor, Stampseed. Is your Bitcoin in cold storage really secure? Are your seed words really secure? Stampseed's do-it-yourself kit has everything you'll need to hammer your seed words into commercial-grade titanium plates instead of writing them down on paper. Don't do that. Paper sucks. You want to literally stamp your seed into this plate of titanium. Your words are actually stamped into the metal plate with this hammer. So once your words are in, they aren't going anywhere. No risk of the plate breaking apart and your pieces falling everywhere. Titanium stamp seeds will survive nearly triple the heat produced by a house fire. They are also crush-proof, waterproof, non-corrosive, and most importantly, because this is generational wealth, time-proof. All things that paper is not, allowing you to hodl your Bitcoin for the long haul. I mean, here is the plate that they crushed. They put in water, they put a blowtorch to it, and as you can see, the words have survived. Stamp your seed on Stampseed. And you can use promo code SIMPLY to get 15% off anything on their store. All right, everybody, you can scan the QR code on your screen. Guys, don't write down your seed words on paper. Stamp them onto one of the strongest metals on planet Earth, titanium. Head over to stampseed.com today. Use promo code SIMPLY for 15% off. At the time of recording, the Bitcoin price is $100,080. Block height, 879,524. Sats per dollar, 999. Market cap, 1.98 trillion. Bitcoin versus gold market cap, 10.46%. Oh, sats per dollar just broke 1,000. That feels good. Percentage issued, 94.33%. Decline from all-time high, negative 7.6%. Realized monetary inflation, 1.07%. In the grand scheme of things, we are just getting started. There's a very famous Twitter Spaces that Michael Saylor joined a couple years ago. I'm going to just have this like kind of playing or show you guys in the background if you guys want to look it up. It's called Michael Saylor's 3 Catalysts for Bitcoin to Reach $5 million. We've played it for you guys so many times, but there was 3 things that he said needed to happen. Number 1, the approval of the spot Bitcoin ETF. Number 2, the change in the FASB accounting rules. Those 2 things have already happened. The change in the accounting rules, I think, went into effect in December. And of course, the approval of the spot Bitcoin ETF happened in January of 2024. But the third thing that he said was the ability for banks to custody Bitcoin. And that's why this SAB thing is very, very important. So why am I going to talk about this? Well, check out this latest article. U.S. banks may hold Bitcoin and crypto under incoming Trump executive order. Remember, that's the third thing that Michael Saylor said needed to happen in order for Bitcoin to hit $5 million per coin. Not Nico's words. Those are Saylor's words. The article goes on to say President-elect Trump may issue an executive order effectively allowing banks and financial institutions to hold BTC and crypto assets on behalf of their clients, according to a new report. The incoming order could reverse a regulatory guideline that has shaped how financial institutions account for and custody digital assets. Quote, Trump is expected to issue executive orders on the first day of his presidency that may address issues including debanking and the repeal of a controversial crypto accounting policy requiring banks hodling digital assets to count them as liabilities on the bank's own balance sheet, according to a person involved with the conversation. The potential executive order would reverse Staff Accounting Bulletin, or the SAB 121, an SEC guideline that requires certain financial entities to list even the crypto assets they hold on behalf of customers as liabilities. You could see why, it's almost as if they didn't want people to do it. I'm not saying that's the case, but looks like it. Crypto proponents say the guideline blocks financial institutions' ability to enter the digital assets arena because treating custodial assets as liabilities could misrepresent the company's financial health. A bill aiming to eliminate SAB 121 recently passed both the House and Senate, but President Biden vetoed the bill. I remember when I was speaking to Eric yesterday, he was making the case that was one of the major reasons that, the Democrats were, this election, you can make a very strong argument. I'm not saying my words, not Eric's, but you can make a very strong argument that one of the major reasons the Democratic Party lost this recent election was because of their of how people perceive their stance is on the Bitcoin industry. I'll put it like that. And again, if it passed the House, if it passed the Senate, and then Biden, vetoed it, that's not a good look, right? So anyways, Rob, this is up your alley, man. Like, part of your business is giving this functionality to institutions to custody Bitcoin and feel secure in their custody of Bitcoin. Yep. And I feel like this was a major roadblock in order for that to happen. So what is your take on this recent news? And again, this is pretty exciting, right? 4 days from this potentially being repealed. It looks pretty good. Rob, what's your take?
Yeah, absolutely. Yeah. So this has been one of these like arcane like regulatory frameworks with staff accounting built in 121 that put the entire kibosh on a bank touching this at all. Mechanically, what this meant though is that if you were a bank and someone maybe gave you 1 Bitcoin, you'd have to hold the dollar amount in equivalent withheld as reserves to have everything 1-to-1, and it would just ruin the bank's ability to do any other sort of lending or borrowing. It's actually a little known fact that this is like the one thing the Biden administration vetoed before in the last legislative session. This was bipartisan, where you had Senate Minority Leader Chuck Schumer from the Democrats with the Republicans all coming together saying, this is ridiculous. Banks, if they want to be able to custody Bitcoin, should be able to do it. And ultimately what happened was it got through the House, it got through the Senate, like you would have in the United States in passing laws. For once, Congress did its job and it passed a law to stop this and basically overturn it. And then Joe Biden vetoed it. Now, the funny thing is that this is all an executive thing. It comes from the SEC. So the president, who is the ultimate source of power for the Securities and Exchange Commission, also could just pass an executive order that overturns it. Joe Biden refused to do it on the executive order side. He refused to do it by vetoing on the legislative side. And it looks like President Trump, when he's elected, inaugurated in 4 days, is just going to kind of clean this whole thing out. It's massive for institutional adoption. If we're talking about kind of like the big unlocks the ETFs provided, the banks are looking at this and saying, wait a second, why aren't we getting fees for managing this stuff, right? Like, why does it have to go to like these third-party custodians? And so you're going to see this democratization of the accessibility to Bitcoin for financial services. This is a massive catalytic unlock. It's just one of these things that it's not sexy, right? It's like we're talking about regulatory advisory bulletins from the Securities and Exchange Commission, but you start realizing how much capital is being locked up from here. This also goes into what the FDIC was doing with Operation Choke Point 2.0. All of that is going to be going away. And it's going to be just really wild to see how the ecosystem develops over the next 6 months and couple of years without having the government just actively trying to kill off the industry. It's a whole paradigm that we're entering.
Absolutely. And again, like Rob, they forced us. They forced our hand. Like Bitcoiners, I think, are inherently apolitical. You can make the case that we're anti-political. We didn't even want to get into the political discussion, but there was a point where me and Opti were like, and we were, of course, we have a show, so we we speak our minds live sometimes, and we're like, Opti, are we gonna have to move to El Salvador? It was pretty scary at some point, like the attack on self-custody, the proposed 30% Bitcoin mining tax, all the information that came out with Operation Choke Point 2.0, how they essentially sabotaged some banks. They were actively asking banks not to onboard customers that had anything to do with the Bitcoin industry. Like it was pretty crazy it was, if you were a Bitcoin entrepreneur in the United States in 2024, there's lots of moments of uncertainty. So I'm really glad that, this new incoming administration is coming in, and I don't think we're asking for special privileges. We just want to be left alone. That's all we're asking for. So, and I think they're going to do just that. And I think they're going to do even more. So, very exciting stuff. Opti, what's your take on this, man? I mean, Saylor said this was back when he recorded that Twitter Spaces. It was back in 2022. And again, he said that 3 things need to happen in order for Bitcoin to hit $5 million: the change in FASB accounting rules, the spot Bitcoin ETF, and then what it seems like is about to happen, the ability for banks to custody Bitcoin. Opti, your take.
Yeah, well, obviously, as a Bitcoiner, I'm really not a huge fan of banks custodying your Bitcoin, but we all knew that this is where it was trending. And like Rob was saying, obviously they're having these conversations, even though publicly they're flooding Bitcoin and they're attacking Bitcoin. Behind the scenes, they're asking themselves exactly what Rob just asked. Like, why aren't we being allowed to custody this Bitcoin? They're leaving money on the table. We all know bankers want the money. So I think it was only an inevitability that this would happen, especially considering that the Trump administration has been, pro crypto, and that was one of their main stances going forward. So as Rob was saying, and we've been saying this on the show for a while, it is going to be a very interesting, 4 years in regards for Bitcoin. Hopefully we see some very significant changes happen within the first 100 days. And speculating on what these executive orders will be, I think it's really the 3 things on the table. 1, of course, repealing SAB 121. 2, what everyone's been talking about, which is the strategic Bitcoin reserve announcements, or rather actually implementing this. And then maybe the 3rd one is just freeing Ross. Like, if we get those multiple 3 things like day one, I don't know how any Bitcoiner could be anti-Trump at this point. It's just like, get out of our way. Though, of course, he might be unleashing the shitcoin wave as well. But as long as Bitcoin doesn't get caught up in the mess, I think we're going to win. So just like we're saying, as long as they get out of the way and allow for the use of Bitcoin, for people to custody Bitcoin, not fighting us with Operation Choke Point 2.0, it's going to be very huge. And also, I didn't fully dive into it, but Caitlin Long tweeted this morning that there's been some huge resignations from the FDIC, and these are people that were in cahoots with Operation Choke Point 2.0. So I'm sure it's going to be a crazy 2025 if they just get out of our way. So I am super bullish on all this stuff getting pushed through, and we get some favorable laws here in the US, and we don't have to leave anymore. Maybe we can get, the Bitcoin wallets, the Lightning wallets to come back into the States, and we can start using those again. Like, I'm pretty hopeful right now.
Yeah, absolutely. Yeah, I mean, elections have consequences. I think us Bitcoiners, we really believe in the theory from the sovereign individual that, politics are irrelevant. The internet's going to kind of change everything. But I think during the transitionary period, which is, I think, where we are, I think politics still play a very, very, important role, unfortunately, because, I think that if, the Biden-Harris administration got another 4 years, if Harris got another 4 years, I think the policy that they had, I think, was going to continue. And Bitcoin, Bitcoin doesn't need a politician. Bitcoin is government resistant, right? So I was never worried about the survival of Bitcoin. However, I think Bitcoin entrepreneurship and I think the Bitcoin industry in the United States definitely would have felt a little bit of hurt and pain. So I'm really glad that the results were like they were. So very excited for the next 4 years. The next 4 years, I think, is going to be great. And I think a lot of innovation is going to happen in the space. All right, everybody, we're going to hit the news. We will be right back.
I want to give a very special shout out to our sponsor, Compass Mining. They make Bitcoin mining accessible to everyone, from beginners to experienced investors. Their turnkey miners gets you online and hashing within 48 hours, making it easier than ever to start your mining journey. Plus, with their active marketplace, you can resell your miner at any time, adding flexibility and value to your investment. Visit their website to access a wealth of resources, learning everything you need to know about Bitcoin mining. Take your first step into the world of Bitcoin mining with confidence. Discover more at compassmining.io. Again, compassmining.io, and see how Compass Mining can power your success. I want to give a shout out to our sponsor, Foundation. It's self-custody done right. They built a premium grade hardware wallet called Passport right here in the US, and it integrates seamlessly with their free app called Envoy. Passport is fully open source and verifiable. It's the most intuitive Bitcoin wallet designed with a UX reminiscent of a classic feature phone, so you'll know how to navigate it and use it the moment you pick it up. It's also air-gapped, meaning Bitcoin stays offline, never touching an internet connection. It's Bitcoin only, open source verifiable, air-gap security model, gorgeous design craft, premium grade materials. Get your Bitcoin off exchanges and into your own hands in just a few minutes with Passport at foundation.xyz/simply. Get peace of mind.
All right, everybody, this is Opti. He's not on the phone right now. He's actually holding a Passport by Foundation Devices. Not your keys, not your cheese. If you use promo code Simply, you won't get Opti, but you will get a discount to the Passport by Foundation Devices. Take self-custody of your Bitcoin. Scan the QR code or check the link in the video description. Also want to give a shout out to the 1,500 of you guys watching live between YouTube, Rumble, and X. If you guys are enjoying the show so far, make sure to smash that like button. We're almost at 600 live viewers on YouTube alone. Help us break 200 likes within the first 45 minutes of the show. Smash that like button. Of course, shout out to the Rumble and X audience as well. Anyways, I thought this was quite interesting before we jump into the news article of today. 60, according to this Twitter post by Hunter Horsley, he said that 61% of financial advisors think Bitcoin will be 100 to 250K by the end of 2025. I mean, it's not very helpful. This is a very big range of numbers. He goes on to say lots of interesting data points in Bitwise Invest and Vetify 6th annual survey of several hundred advisors. And here's kind of the breakdown. 1% of advisors for some reasons think Bitcoin's going to be at $0. 6% of advisors believe it's going to be between $1,000 and $50,000. You guys need to get rid of those advisors if they fit into that category. 26% believe it's going to be between 50 and 90 and 99,999. 61% believe it's going to be between 100K and roughly 250K. 4% believe it's going to be between 250K and $1 million. 1% believe it's going to be between $1 million and 10 million, and 1% believe it's going to be above 10 million. I want to get that advisor.
Yeah. Who are that 6% of advisors? That's who we need.
Who's the person that's saying it's going to be $10 million for a coin in 2020? I need to talk to him. All right, everybody. So let's jump into today's article. Quick update. I do want to give a little bit of preface here. So guys, I worked at Swan, still have a lot of friends at Swan. So I'm not going to be offering any type of commentary. I'm just going to read you guys the article. I think it is an important update. So it goes on to say, Tether files lawsuit against Swan Bitcoin over joint venture dispute. It goes on to say, stablecoin issuer Tether has filed a lawsuit against Bitcoin financial services company Swan Bitcoin, accusing the firm of, quote, significant breaches in their agreements. In a statement to Cointelegraph on January 15th, Tether, along with co-claimants 2040 Energy, confirmed the legal action against Swan Bitcoin. Throughout our relationship with Swan, Tether has consistently acted in good faith, supported mutual business objectives, and adhered to all relevant agreements, Tether said. Conversely, Swan has acted recklessly, and their actions have resulted in significant breaches by them of the agreements between us. Consequently, we have been compelled to take necessary measures to protect our investment. The case filed in the High Court of England and Wales escalates an ongoing legal battle between the two companies. It goes on to say, what sparked the dispute? Swan and Tether established 240 Energy in 2022 as a joint Bitcoin mining venture. Under the partnership, Tether provided funding while Swan handled operations. Swan Bitcoin alleged that former employees from its mining arm stole proprietary information, including software code and business strategies, to form a rival company called Proton Management. Swan described the employees' actions as part of a scheme labeled, quote, Rain and Hellfire, designed to sabotage Swan's role in the joint venture. The companies claimed that key personnel carried out this plan, including Alex Holm and its former head of business development, Hafa Zaguri, its chief investment officer and mining head, who now serves as Proton CEO. Swan accused Proton of misusing its confidential trade secrets to establish itself as a direct competitor, which it argued had, quote, irreparably harmed Swan's ability to compete in the market. According to court filings, Proton Management allegedly convinced Tether to cut ties with Swan and back Proton in the mining venture instead. On August 12, 2024, Swan CEO Corey Clipson was removed as the CEO of 2040 Energy, and Proton officially took over the operational and administrative functions of the mining operations. Swan Bitcoin has also accused Tether of facilitating what it described as a, quote, hostile takeover of its mining operations. Tether has denied any wrongdoing, asserting that it acted by its contractual rights under the joint venture agreement. In a statement to Cointelegraph on September 27, 2024, Tether is aware of recent allegations made in a lawsuit that mentions a subsidiary of Tether dedicated to proprietary mining and other investments. While Tether is not named to defend in the case, we have taken note of the claims and deny any implications of wrongdoings. It goes on to say, Swan Bitcoin's legal troubles. Swan Bitcoin has also launched legal action against a law firm, Gibson, Dunn & Crutcher, in November 2024. The company claimed the firm abandoned its case against Proton after taking on Tether as a client, violating attorney ethic rules prohibiting dropping a client to avoid conflicts of interest. Clipson described Gibson's move as a betrayal. Quote, Swan was blindsided, said Corey Clipson. And it goes on to say, quote, Swan is in receipt of a lawsuit filed against in English courts regarding control of a mining subsidiary. It will not be appropriate to comment on the substance of that lawsuit at the present time. Save to note that Swan will vigorously defend all of its rights, a spokesman for Swan told Cointelegraph. So I don't really have any commentary on this, like I said, based on my history. But a lot of I'm gonna pass it on to Opti. Opti, what's your take on this?
So, well, first of all, this whole Swan drama of 2024 is like a reality TV show at this point. It doesn't seem like it's going to end well. And my comment on this is I would not want to be caught in a position to try to fight Tether in anything, considering that they have a huge war chest and they're just super well funded. So, I mean, it's been crazy just watching this whole story play out and read the court cases and the lawsuits. It's absolutely nuts. It's literally like a reality TV show when I read this stuff. It's almost mind-blowing how all this stuff has happened. And just trolling a little bit, Nico, it looks like you made the best trade of 2024. All right, I'll stop.
No comment. Anyways, Rob, what's your take on all this?
Well, I haven't seen any of the details for this. I know the previous lawsuit that Swan filed against Tether was made available in like public court documents in the United States. This lawsuit is in Wales, and I was confused. My wife is Welsh, and I was like, nothing happens in Wales. Why would this be happening in Wales? And I guess it's because Tether is based out of the British Virgin Islands, so they roll up ultimately as a colony to the United Kingdom like court system. I haven't seen any details of what the actual lawsuit alleges. I've only seen kind of the comments from the press release, so I would just kind of hang tight and see what actually unfolds out as those court documents become public.
Absolutely. I think that's a really, really good take. Now, the other thing I want to get your guys' take on is the recent news that came out, I think it was yesterday. U.S. government says stolen Bitcoin from 2016 Bitfinex hack should be returned to the exchange in kind. It goes on to say, the quick note, the U.S. government said Bitcoin stolen in 2016 should be returned to Bitfinex in a court document filed in a D.C. court. The latest filing is in line with an October court ruling that said both Liechtenstein and Morgan, as well as Bitfinex parent company, believe that the crypto exchange is the sole victim. The U.S. government says that over 94,000 Bitcoin stolen in the 26 hack of Bitfinex by the two people, Leela, and Heather, should go back to the exchange in a court document filed this week. Now, what's really interesting to me, and of course you can't confirm this 100%, is I tweeted this out, I think it was yesterday. I don't know if they would have given this Bitcoin back if Biden or Harris won the election. I don't think they would have done that. And I think that, it's quite convenient that Trump said that, listen, we're going to build a Bitcoin strategic reserve. None of this Bitcoin is going to be sold while I'm in office. And then again, 4 or 5 days before he's going to be sworn into office, the U.S. government is like, that Bitfinex Bitcoin that we've been holding on to this entire time, actually, it belongs to Bitfinex. So I'm not saying that's the right thing to do. Bitfinex should totally get their Bitcoin back that was stolen from them. However, I don't think the motivation, I don't think they're doing this for the right reasons, is my opinion on this. So Opti, what's your opinion? And then we'll move on to Rob.
Yeah, well, I just saw, what was that girl's name? Frazzle Drip or whatever her name is. Razzle.
Is that her handle?
Razzle Khan.
Razzle Khan.
Put some respect on that name.
Yeah, sorry. I just saw her.
The richest rapper ever until
yeah, exactly. I just saw her latest music video, so it seems like maybe she's kind of lit about this. I don't know, but yeah, I mean, the coincidence is I think they're too big to ignore here. Obviously, Trump has been announcing an SBR. He did kind of talk, or at least was saying to the DOJ, hey, we'll just take all the Bitcoin you had and that, turn that into the strategic Bitcoin reserve. Then we saw the DOJ announce that they're going to sell a Silk Road coin. Now we're getting, some more stuff coming out of the court saying that they're actually going to give back a lot of the Bitfinex coin. So it does seem like a lot of this stuff is happening to essentially, cut Trump's knees on this SBR stuff. But hey, if you're a Bitfinex holder and you're getting in-kind returns of your Bitcoin, I mean, I guess a forced hodl from 2016, it's I mean, you're probably kind of happy right now. So, hey, I guess, no coincidences here, but in regards to getting your Bitcoin back, you're probably kind of happy about this. So it is going to be interesting how this actually plays out and how it gets distributed, and if everyone actually gets the coin that they held, et cetera, et cetera. But yeah, I don't know. I'm just I'm more thinking about just Razzle Khan's music video here. So that's my whole thought. I'm sure Rob has some actual insight on this.
Oh man,
yeah.
Rob, what's your opinion, dude?
I think this was inevitable. Even if like Biden and Harris won, there just would have been lawsuits that was stolen property get returned. It was kind of weird that those coins had been seized for over a year, right? And they were just kind of hanging out in the U.S. government's custody. It didn't make sense to me. So even if the Biden-Harris administration had won and it was going to be hostile, there would have been very good legal standing to try and seize back those coins. Now that Trump has won, it seems like it's all kind of moving. Like everyone's just kind of moving along, knowing that this is going to get inevitably released anyway. It's better than the alternative where they could have sold the Bitcoin and gave them in-kind dollars back, right? So the fact that the U.S. government is returning in-kind is also an interesting lens of that, they are respecting it as property and kind of giving it back to the rightful owners.
Yeah, absolutely. I agree. It's just, again, not for the right reasons, but it was always going to be that outcome. And again, it's so interesting, right? They see like, the U.S. government, it's like they seized it. You would think that they would give it back to who it was stolen from, but they took a very long time. And is it just because it's Bitcoin? Because if it wasn't Bitcoin, I think they would have given it back a whole lot quicker. Which anyways, the whole thing is quite interesting. All right, guys, we're going to hit the culture. We have Rob Hamilton in the house today, and we're going to talk about AnchorWatch. So very, very excited. Guys, stay tuned. We will be right back.
I want to give a shout out to our sponsor, HIVE Digital Technologies. As the first ever public miner, HIVE's been battle tested through every possible market. And as the first with an AI strategy, HIVE continues to redefine the future of sustainable energy. Also, gotta casually drop this in here, HIVE consistently tops the industry in Bitcoin mined per exahash. They're lean and mean, they're green and clean, and they're changing the game. Learn more by following them at HIVE Digital Tech or check out their website, hivedigitaltech.com.
All right, everybody, I do want to give a shout out to our sponsor, BitBlockBoom. Guys, this is going to be one of the best Bitcoin conferences of the year, April 3rd through the 6th of 2025. You want to get your tickets quickly because the prices do go up. Guys, it's going to be one of the best Bitcoin conferences of the year. BitBlockBoom is near and dear to my heart because it's actually the first conference where me and Opti met each other in person. Simply Bitcoin in its current form would probably not be what it is today if it wasn't for this conference. It's awesome. They have Texas barbecue. They have an axe throwing contest one of the days. It's going to be awesome. They have a workshop day. They have a conference day. If you're trying to get a job in the industry, so one of the most effective ways is to go to Bitcoin conferences, and the BitBlockBoom conference is one of the best of the year. So it's going to be April 3rd through the 6th of this year, 2025. And if you use promo code BBB21, BBB21, you get $100 off of your ticket. Anyways, I've been looking forward to this show. Rob, I think the first time we met was on a news desk at the Bitcoin 2023 conference, I believe it was. And that was the first time, like we talked. And I think American HODL was on the desk as well. My memory might be, effing with me, but you were blowing my mind in terms of talking about all the multi-sig kind of functionality that you guys were working on, and how that was going to be an absolute game changer for company treasury management. And with your guys' recent launch, you guys announced the insurance product that I get this question all the time, specifically for like older, higher net worth individuals. They're like, okay, fine, 2 of 3 multi-sig, 3 of 5 multi-sig. There's so many companies that are offering this product, but like, what happens if someone shows up at my house? Like what's going to happen, Nico? Like what's going on there? So, Rob, thank you so much for coming on the show. Like I said, huge fan of this project, been paying attention to it. Congratulations on the launch. If you were to give everyone, almost 2,000 people watching live right now, a quick elevator pitch on what AnchorWatch would be, the floor is yours.
Yeah. So quick elevator pitch would be insured Bitcoin custody. Now, there's a lot to unpack there, but to keep it brief, there's two parts here. The insurance that's offered is a Lloyd's of London insurance policy insuring your Bitcoin, your UTXOs directly tied to your name. The interesting of how we execute this is we leverage native Bitcoin technology called Miniscript, but it allows us to do more advanced Bitcoin vaulting schemes today on Bitcoin without a soft fork, supported by most major hardware wallets. As just a very casual walkthrough, you can have, let's say, a 2 of 3 multisig as you as the customer, plus a 2 of 3 multisig at AnchorWatch. Now, for an individual or a company, this gets really interesting because we're actually able to, as joint custody, we both have to co-sign. It's not a 4 of 6. It's 2 separate 2 of 3s that have to sign off on. You have a distribution across organizations in risk. So let's say someone went and stole all your hardware wallets and tried taking the money. The keys may be gone, your keys may be gone, but the money hasn't moved yet because we have to co-sign the transaction. And we actually leverage also in this scheme time locks, which actually have over the life of your insurance policy over 1 year. We can make it say, instead of a 2 of 3 from the customer, we can make it a 1 of 3 from the customer. And then maybe at the way end, after your insurance policy expires, it goes to full sovereign self-custody. And we have a layer in the middle where in the event someone stole all of your keys have been lost or destroyed, if you were in those California wildfires, for example, we're still able to recover the funds, where AnchorWatch has a 2 of 3 plus one of our recovery partners, Coin Corner, out of the Isle of Man. We're able to come together and move those funds back to your control. And this is all handled on-chain natively. Think of it as a multisig is the next level. Multisig has been around in Bitcoin since 2012. It's actually BIP 11 that was introduced by Gavin Andreessen back when he was the lead maintainer after Satoshi left the project. And then there's BIP 14, which is pay to script hash, which was added in 2014, also by Gavin Andreessen. So he was like the initial person to kind of provide the framework on how multisig works today. This was an observation we had that the custody technology landscape had not really evolved much since 2014, 2012. And so what we're doing is kind of putting forward this institutional way of being able to help protect those coins, distribute risk, and offer an insurance policy ensuring you at the end of the day, ensuring things like wrench attacks, violent coercion, like a kidnap and ransom equivalent of a policy. Being able to think about it from the perspective of if the event that we collude, us at AnchorWatch, are criminal and kind of stealing your coins at any point, that would be covered under the policy as well, right? So kind of thinking about the way risk works in Bitcoin, what we do is actually something called self-insurance. You hold your keys, you own your risk. If you mess up, there's no refunds. The other way that you could manage risk is doing a risk transferring, which is what you have with insurance. And that's what we're able to build out with AnchorWatch. And just for institutional clients, high net worth individuals, people who want to have, they believe in Bitcoin, they want to hold keys, they understand the greater vision, but they don't want to have to worry about, if I mess everything up, do I lose all my Bitcoin? And that's what we're able to kind of provide today as a way for being able to make sure we can backstop and protect your Bitcoin.
It's fascinating. And again, like this is a problem that needs to be solved for global Bitcoin adoption. The Bitcoin custody is not easy. It's not easy. And you can't apply the same logic of the traditional financial system to Bitcoin custody. It does not work. You need to build out solutions for an entirely different technology. And it seems like you guys are doing an incredible job at just that. Opti, what are your thoughts, brother?
Yeah. Well, actually, we did get a good comment earlier in the show about self-custody, and they said, like, I don't self-custody because it's scary. And I think it's kind of a good segue into AnchorWatch. So, what are the use cases for Bitcoin insurance, and who is it for? Like, who are your ideal, customers, or who are you trying to target? What's the demographics you're looking at?
Yeah, so I think the two buckets are, one, our minimum policy size starts at $250,000 worth of Bitcoin. Now, that is like the minimum we can insure. If you had 2 Bitcoin, you could over insure a little bit. And our highest size is up to $100 million per customer. And so anyone with Bitcoin exposure in that range, which wants to have insured custody, are people that today we can sign up and do business with. We are the first to be able to offer this kind of policy direct to individual customers and consumers in the United States. That's the other constraint is, as of today, you have to be a US domiciled person or a company based out of the United States to be able to get the insurance policy coverage. So anyone in that broad spectrum, we've been since our formal opening at last Monday, we've been dealing with hundreds of inbound emails, ranging the whole gambit from individuals, trusts, businesses, right? Anyone who's looking to kind of like upgrade their security and know that if, especially if you're a fiduciary, right? When you think about it, like the gold ETFs are insured. Right, your stock shares, you have the SIPC, there's insurance for traditional securities. Bitcoin as digital gold, though, just has a very underdeveloped risk market associated with it, where most of the insurance policies today are sitting at a custodian. So if you're using a custodian and you're a fiduciary managing funds, I would make the case that you actually have a fiduciary obligation to be pursuing insured custody, because otherwise you're putting all of your risk at a counterparty who may have an insurance policy, may not have an insurance policy. If they do, you as the customer are not named on the insurance policy, maybe, or they have a level of insurance which is fractions of their total coverage. To my understanding today, Coinbase has a crime policy in the event that they commit a crime to steal funds. That's $350 million, I believe, but they have hundreds of billions of dollars of assets under management. So all of the ETFs, all of the retail platform, everyone that's using Coinbase has one policy that they're sharing. And we just view this as like from a risk distribution and like kind of like the health maturization of the ecosystem, you're going to have insured custody becoming available, especially when you're talking like these pension funds, like long dated out like obligations. If you're managing these funds on behalf of other people, it makes perfect sense that you already accept the price volatility of Bitcoin, right? It goes up and it goes down, but it goes up more than it goes down. The last thing you want to be in a position is like an FTX or a Celsius, where like, okay, I made the right directional bet, but then all the money was gone, right? And then at the end of the day, that you need to have, if you're thinking about that from an institutional custody perspective, these I believe should be table stakes for how you're making the decisions on how to safeguard your Bitcoin.
Love it. Okay. And I was looking through your website earlier.
Yeah.
And actually, first question is for people in the chat, does Bitcoin insurance replace good security practices? I know this is something you harp on your website, so let's talk about that a little bit.
No, I believe they're strictly complementary, right? The idea that you're going to, this is actually kind of insurance called like a morale hazard. Like you don't want to be like, oh, I'm insured, I'm not going to care anymore, right? Like, oh, I have car insurance, I'm not going to wear a seatbelt, right? Like it doesn't naturally work that way, because the intent of insurance is for disastrous outcomes, for being able to have, not being totally financially impaired. I believe that for one, all of the security practices on chain that are governed with Trident Vault and how it's built out, we put a lot of like guard and safety rails around like how those funds can move over time in a much more robust way than what's really available in the larger market today. I'll give a huge shout out to the Liana wallet guys from Wizard Sardine. They were kind of the only other people when I was building this out 2 years ago that were pioneering in this path. And they have a great solution too that's fully self-sovereign, fully open source. You can download it, run it on your node, and you can do these kind of more advanced recovery schemes. I think you need both though, because ultimately the insurability of the product is based on the security and the practices around the management of the funds themselves. Like if you were thinking about it, like you want to be having all of your bases covered, and insurance is a part of your strategy. It's not the entirety of your strategy.
Love it. And someone in the chat says, you'll never get your actual Bitcoin back. So if you do wreck yourself, how does this insurance play out? You're getting paid back in cash? Like what's the way that this works?
This is actually a great question. And it actually ties into what we were talking about earlier, right? With the FASB rules and the SAB 121. It's even worse for insurance companies. So to directly answer the question, it's a dollar denominated policy. Why is that? So insurance, the way it naturally works is you have a pool of capital, and that pool of capital underwrites a certain body of risk. And in the event that there's a loss, that pool of capital pays out the claims. Also, when you pay the insurance premiums, it goes to those that are providing the capital, right? So you can think about it that way. It's like that's how the high level, like the relationship works for insurance and capital. Now, to offer a Bitcoin denominated insurance policy, you'd have to have a big pile of Bitcoin sitting on your balance sheet. Well, you'd think, well, it's interesting. Pension funds and insurance companies are the same way, where they have long dated out liabilities and possible obligations they need to pay out in the future. Now, this is where it gets interesting. There is a self-regulatory body in the United States. The US, funny enough, insurance is one of the few things that doesn't have formal federal level regulations. It's a state-by-state regulated industry. Now, There's the National Association of Insurance Commissioners, the NAIC. They are a self-regulatory body of each head regulator from across the 50 states and territories that come together to set the insurance laws. Bitcoin is what's deemed as a non-admitted asset. Okay, that's a lot of word and technical jargon. What does that mean? It means that if you're an insurance company and you buy Bitcoin, you have to write 100% of the value of that off your balance sheet. So if you buy $1 million of Bitcoin as an insurance company, you have to write off $1 million on the health of your balance sheet and your surplus capital. So it's massively penalized to be having any Bitcoin exposure if you're an insurance company, how the laws are written today. I think very much in the same vein as the FASB rules, Staff Accounting Bulletin 121, this is going to be one of those next big milestones to get knocked over. And it's actually really just as a tangent, you can actually see the largest, like some of the largest buyers of the MicroStrategy convertible bonds was Allianz, which is an insurance company. And it's because they get the Bitcoin price exposure, but since they're not holding spot Bitcoin, they're holding a convertible debt note for a publicly traded company. They're not getting that 100% impairment note, right? I'd also like call out the Ross Stevens mentions this actually in his the NYDIG annual shareholder letter, just being able to think about like combined ratios in the health of insurance companies and getting access to Bitcoin. I think it's a really compelling use case for being able to think about how can you get these dollars to work and get the price exposure to Bitcoin in a way that doesn't impair your balance sheet. So I think this is part of the many pillars like pension funds, insurance companies over the next decade will be starting to understand that this is really powerful capital and they should be getting that price exposure. How that all ties back into Bitcoin, AnchorWatch today with our policies, dollar denominated. Let's say you have $1 million policy and you could pick either a 25% or a 10% deductible. Let's say you pick a 10% deductible, you have $1 million policy, you have a loss that happens. One, Lloyd's of London are the ones who actually process and handle the claims. We believe this is good from a governance and kind of separation of process where I personally am not able to make a decision unilaterally one way or another. It's ultimately their capital, so they have the right to be able to review claims. Let's say claim goes through, it's deemed that it is more likely than not that this is a legitimate claim and the legitimate loss that occurred that's covered by the policy. They pay out historically very quickly. That's Lloyd's of London as a reputation has been around since the 1600s. And they're like, when you think about it, I view it as way in conversation, I'll describe it as it's kind of like the New York Stock Exchange for like equity, but they're trading risk instead. These are very large, well-capitalized, A-rated insurance carriers that are kind of participating with us and being able to underwrite this deal with Lloyd's of London. And they are very quick at being able to process out those claims. I'm hearing stories about people who were impacted by the California wildfires, and there are already adjusters going out there surveying the damage and being able to pay out way faster than you would have from a traditional stateside regulated insurance carrier. This is more insurance arcane law, but you saw this with the California wildfires. The insurance companies, a lot of them left because California refused their ability to raise rates because they saw how much risk was there. Because it's their capital. They're very invested in being able to appropriately price the risk. But there were people that, like Lloyd's of London, that were willing to come out and kind of underwrite and insure these more boutique risks that are less common. And Bitcoin also falls into that role, ultimately. So on the claims processing side, on the order of weeks, very, very fast. They're also a dollar-denominated business, so they have no incentive to try and arbitrage Bitcoin price because it's immaterial to their balance sheet today. I see a future, though, where insurance carriers very naturally are going to be holding Bitcoin-denominated policies. And I think in the longer arc of history, this is where you actually have Bitcoin banking exist. I don't think it makes sense to have custodians that are uninsured. And ultimately, if you're choosing a banking relationship with someone like you would today, you're picking someone who has a very healthy balance sheet of dollars that underwrite their business. You would have the same concept that would exist with Bitcoin banking, that if you're going to use a custodian, you're going to use a counterparty, you're going to pay them fees to hold their Bitcoin for you. If it's a heads I win, tails you lose situation, because they can just charge fees. And then if something goes wrong, they're like, oh, I'm so sorry. Right. And I think insurance companies are the prime capital vehicle to be underwriting risk and being able to kind of be able to have the balance sheet health. And in the event that there's an impairment, they could be holding Bitcoin themselves to be able to make customers whole. And then they are way more motivated to make sure that everything's running correctly because it's their capital that is liable for being able to pay out if customers have losses. And I think that is a skin in the game, traditional Austrian economic risk alignment for how the capital formation of like custodial relationships with Bitcoin are going to exist in the future.
Amazing.
Incredible,
Amazing.
dude.
All right. So we are getting in the weeds on insurance stuffs, but I think it's very important for our audience to kind of recognize that as Bitcoin does take over the world and it does get entrenched in traditional finance, that you need products like this to really unlock a lot of capital into Bitcoin. And this is also one of those things of just de-risking Bitcoin at large. And I like kudos to you and the company you're building. And I can't wait to see it succeed more. If you want to chat a little more of that, or do you want to talk about the custody tech, which I'm sure the audience would love? You did kind of glaze over it a little bit.
Yeah, I think maybe we should go a little bit more into the custody tech. I just think big vision. I know insurance is not traditionally sexy or fun, but it's what my co-founder Becca and myself get up every day really excited and jazzed about. I think this is part of the hyper-Bitcoinization and financialization of Bitcoin in general. It's a better way to have these kind of relationships of counterparty risk, right? You have counterparty risk always if you're working with a counterparty. Insurance is the mechanism in which you transfer counterparty risk to someone else. You pay your insurance premium, you follow the insurance policy. That counterparty risk still exists, but it's beholden of another party to manage that. And in the event that that counterparty risk comes to fruition and there's a loss, the insurance company steps in. It's a very natural Austrian economic way to do risk distribution. So the technology side. And now for those at home that want to be fully sovereign and self-custody, all of the technology I spoke to today is entirely open source and available for you to go build off on your own. So Miniscript is something that actually came out of Blockstream in 2019. So the whole, and I've done a bunch of conference talks on this, but let me, at a very high level, Bitcoin is programmable money. Whenever you use a multi-sig on Bitcoin, you have these things called opcodes, and you have opcheck multi-sig. And what it does is it does a thumbs up, thumbs down, have you provided the necessary amount of keys to move these funds. Now, we can take Bitcoin further, and there's like 130, 140 opcodes that exist. The team that built Miniscript, which is Andrew Polstra, Peter Will, and Sanket, like very senior engineers in the Bitcoin open source contributing ecosystem, the people who code up SegWit and Taproot, like the people who run that write the code for the soft forks that we run traditionally in recent history, are the ones who came out with this. And they said, listen, if we can just kind of like take a subset of all of these opcodes and we can kind of understand and do an analysis of how they all operate, we can create like little puzzle piece fragments that can click in together, and you can make arbitrarily large Bitcoin contracts that do a couple key things. One, signatures. We all know and love signatures. It's how Bitcoin works today. Time locks. Now, time locks, there's 4 flavors of them. There's 2 ways you can do time, and there's 2 clocks you can keep. So very, very quick. You have what's called an absolute time lock, which means after this moment in time, you can spend the Bitcoin. A relative time lock is another one, which allows you to say when the funds get confirmed on chain, it starts a timer. So you almost can have like a dead man switch. And then there's 2 clocks. You can choose one of these 2 clocks. You either can pick block height, which I think is everyone more natively is familiar with, or you can use actual wall time. So the miners, every block, this is a fascinating just point about Bitcoin. And all of Bitcoin is entirely an endogenous system. It's entirely self-referential to hashes and signatures and Merkle trees, and it's all kind of connected together. There's one bit of information that comes from the outside, or you want to call it the real world. It's the timestamp the miners put into every single block. So when you have the timestamp put in every single block, this is actually how the difficulty adjustment works. Every 2,140 blocks, 2 weeks, the network does a reflection on itself and says, okay, well, how much time has really passed? And sorry, not 2140, 2104 blocks. What you're able to actually do is have an inference of like, okay, well, 3 weeks. It took 3 like human time weeks to be able to get this 2 weeks worth of blocks. Let's decrease the adjustment. Or on the flip side, you're like, oh, whoa, it took a week to get 2 weeks worth of blocks. Let's increase the difficulty adjustment. So this is how Bitcoin natively works. You can leverage time locks to ride on top of this as well. Right. So the way our AnchorWatch time locks work is since you're dated to an actual insurance contract, you're able to look out into the future and say your insurance policy expires on, if let's say we wrote it today, expires on January 16th next year. So it's expired 2 weeks after it expires. So let's say January 30th. We're actually able to say 2 weeks after your insurance policy expires, the funds are fully self-sovereign. You're able to spend them on your own, right? And this is like a whole fascinating rabbit hole. Also, you can add ands and ors, and all of this is infinitely customizable. It doesn't require a fork. It's supported by the Ledger, the Cold Card, the BitBox02, the Blockstream Jade, the Spectre DIY. I think Crux Wallet's now adding support for it. So there's a robust open source ecosystem for actually building out these tools. What we use at AnchorWatch is Bitcoin Dev Kit. One of the big grantees from Spiral. We're huge fans of them. We work with them closely here at Bitcoin Park. And this is just a wide open ecosystem. I gave them a shout out earlier, but I would check out Liana Wallet if you're interested in checking out how this is done by their team today at Wizard Sardine. There are a lot of great engineers, and a lot of them were also helping add this to Bitcoin Core. So this is a really interesting thing too, is when you sign up for a vault with us, we give you an output descriptor. You can load that into your node and verify the deposit addresses and verify the transactions. So even if we don't exist anymore, you would be able to interact and spend with your funds after the time lock expires by talking to your node directly. I think it's just a massive paradigm shift in how custody should work. And now we're actually seeing more products that are adding mini scripts, such as the Bitcoin Keeper. If anyone knows longtime Bitcoiner Ben Kaufman, formerly of the Spectre project, he's back now. He's at Bitcoin Keeper, and he's mini scripting the app all over the place. I think this is a no-brainer for how Bitcoin custody is going to work in 5 years. Being able to have contingencies and mitigation plans, it allows you to do things like inheritance planning, more resilient recovery for your keys, right? You could have a 2 of 3 that becomes a 1 of 3. Maybe you have a 2 of 3 that becomes a 2 of 4. And you could have a key that your friend holds that can't do anything normally, but only if the funds haven't moved in a year, that fourth key can come in and help recover funds, right? All of this is possible today in Bitcoin. It doesn't require a fork. The tooling is there to go out and be built. And that's just kind of my open, as a general plug for the technology. If you're not interested in insurance and AnchorWatch, just this underlying technology has been here for years, and it's really starting to see the limelight now. And I really think this is kind of the future of how to manage self-custody or enterprise custody or anywhere in between. This is the best way to secure your Bitcoin today.
100 million %. And that's why I was so excited to have Rob on the show today. This is, look, and we say this every single day, guys. Self-custody is the revolution. Self-custody is what's going to change things. We actually released a poll in the chat. 308 of you guys watched. I'm really glad with the results. So 78% of you guys said that you do take self-custody. 22% of you guys said that you don't. And again, if you're just starting out, and for most people start with the ledger and a single sig and 24 words, the self-custody rabbit hole is very, 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 very deep. And there's so many things that Bitcoin, there's so many capabilities that Bitcoin gives you. And eventually, a single sig or a simple multi-sig, I don't think is going to cut it for large corporations, institutions, nation state custody. You got to think ahead, right? So it's incredibly important that this functionality, these tools are being built out, and I think that Rob and his team are doing just that over at AnchorWatch. And like I said, this is an incredibly awesome project. I'm going to be paying attention to this. I also think I'm going to be recommending this to some people that talk to me are like, Nico, how do you take self-custody? The insurance thing is very attractive because it's one of the first things that they ask me. They're like, okay, fine. We'll put it on Casa. We'll put it on Nunchuck. We'll put it on Theia. But what if I fuck up, dude? Or what if there's a $5 wrench attack? What's going to happen? Why can't I just buy the ETF and have it on Charles Schwab? And I'm like, no, but you don't understand. There's a revolution. They're like, Nico, I'm just trying to retire. What are you doing? So this is an incredibly important project. Now, Rob, what would something like this cost, right? So you said the minimum is $250K, and you would insure up to 100 million or 10 million, 100 million.
Yep.
Okay.
100 million.
100 million. So what is this? Is this a yearly cost? What are you guys charging?
Yeah. So it's a yearly cost. And it's tied into the actual value of the asset itself. So what we've been actually seeing from customers over the past week who are signing up for the small size policy, it's actually somewhere in the range of $1,100 to $1,500 a year, depending how they go through insurance underwriting. It's not a uniform price for everyone because like any other insurance provider, we are asking you questions. We're understanding your intended behavior to interact with the vault, which all affects the risk and the pricing of that risk. Our pricing, though, all in is starting at 55 basis points a year. And we think this is a very massive unlock of value when it comes to those who are, looking for a custodian. Like ETFs right now have been heavily discounting fees. They're going to start ramping up those fees. Being able to compare it to, there is no other one-to-one insurance provider out in the market right now. And I think this is actually closer to the real cost of insuring Bitcoin, in the sense that what a lot of other businesses will do is maybe they'll be way cheaper, but they're not offering insurance, right? So it's almost kind of creating basically a wrapper to be able to kind of use this as a loss leader, or being able to use it as a way to kind of boast large AUMs and being able to kind of grow, like from a growth strategy standpoint, but it's actually not the risk aligned way for being able to protect customers. Because if it was, it would be insured. Right. So the moment you leave you go into uninsured custody or heavily underinsured custody, like I said, ratios that are, 10,000, 100,000 to $1, for every dollar on the asset, maybe it has access to like a tenth of a penny of actual insurance payout. This is the actual cost for being able to provide that one-to-one coverage. That's because capital is being locked up to be able to underwrite this risk and being able to understand that we want to make sure that in the event something goes wrong, you're actually able to get paid out. So it is on that value of an AUM business and kind of wrapping it all up in there.
That man, that's incredible. And again, like this is solving a problem just based on my experience. The self-custody thing, it might be like super easy to you because you guys are Bitcoiners, but for whether it's institutions or higher net worth, older individuals, like this is an entirely different ball game. And again, they're just interested in protecting their assets, right? They're not thinking about this type of stuff. And again, I think that this is going to provide a peace of mind. So congratulations on the launch. Very, very cool. Guys, if you want to find out more about AnchorWatch, go to AnchorWatch.com. Again, AnchorWatch.com. Find out more information there. And whether you're interested in the custody or the insurance, you can go check it out. They have a great website. And Rob, thank you so much for joining us on Simply Bitcoin Live today. I really, really appreciate it.
I appreciate it. Thanks for having me.
Thanks. All right, everybody. Today was January 16, 2024. This was Simply Bitcoin Live. I'm your host, Nico. Our guest today, Rob Hamilton from AnchorWatch, and of course, my legendary co-host, Optimus Fields. We're Simply Bitcoin Live, and we'll be back tomorrow for a brand new episode. Until then, peace out, everybody.
Today's episode was brought to you by BitcoinWell.com, a Bitcoin-only platform on a mission to enable financial independence.